I think a lot has changed in the money market fund world after 2 weeks since our last update, and that is what we want to look at in this video. But there are a few things that I feel like I need to emphasize before we look at the breakdown of how the money market funds performed as at the past Easter weekend. There are 5 things that I think you need to know quickly, and you will never be bothered again by the drops. Number one, it's not just your company that is reducing. The reduction is across board. The reason why it is across board is because number two, money market funds are reflective. Where the money is invested, which includes the treasury bills, the treasury bonds, the fixed deposits, and the rest will always be the places that reflect the returns that you get from your money market funds. Some people will say, why won't I just go straight to the T-bills, the fixed deposits, and enjoy more returns instead of going through a money market fund or through a fund manager? That's of course a good idea, but then in a money market fund, there are benefits that you get to enjoy that you will not necessarily enjoy if you went directly to the market. For example, flexibility of duration or term, flexibility of amount that you want to invest, diversification across many options, and the ease of operation in terms of foregoing that bidding, transfer, and all that, and not forgetting the bargaining power that comes with more money under the collective investment schemes. And of course, this ends up returning you a higher rate than you would negotiate for in some of these avenues by yourself. Now, the third thing that you need to know is this: welcome to the world of investment, where the rates will go up and they will go down sometimes. That's the nature of investments. Things are never constant. There is a season where things are going to be going up and another where things are going to be going down. So being a low risk investment, it makes it safer because the lowest do not jump to the negative like some of the options that are out here. The fourth, since the rates reflect what is already in the market or what the market is offering, then these companies receiving good deposits from its clients and growing very fast as well will definitely indicate a drop. And this is because more money is going to the new low return vehicles, and therefore the average automatically is going to be dropping. And finally, before things went to 18% interest rate and the likes, the returns were averaging between 6 and 10%. I will be here to keep tracking together with you as we go along our financial journey. So please make sure you're following and subscribe. But the bottom line is this: keep the main thing the main thing. A fattened cow will fetch a better return than a weak, tiny cow. So please fatten the cow, accumulate fast, and don't get obsessed with the interest rates. So how did the T-bills perform this week? The 364 days option, which was the investors' favorite, as you can see, was largely oversubscribed to 265%, and yet the yields got stuck at slightly above 10%, and to be specific, 10.07%. From the look of things, next week looks like we might be at single-digit returns kwa hizi T-bills, especially on the 1-year option. The 6-month and the 3-month options stood at 8.75 na 8.46% respectively. How will the coming weeks look like over here? So yeah, we can only wait and see. But then, when we look at the United States dollar money market fund, things kind of look good in comparison to the last report that we had, whereby majority of the companies are in green, meaning that they all recorded some growth. Is this what we are going to see in the other categories, the fixed income and the money market fund? Okay, let's wait and see. In our chart this week, only 3 companies had a decline, and those are Kuza, Dry Associates, and Old Mutual. We also had 3 companies return above 6%, and that is Jubilee, Etica, and Kuza. And the average still looks good. So let's wait and see how the Trump tariffs itapelekana over the coming couple of weeks, and we'll see how things go. Moving over to the fixed income fund category, in the last review, if you remember, all companies had recorded a decline and were purely red. But as you can see here this week, 5 companies had an increase in their returns. Green came back to our chart, and only 4 companies recorded some slight drop. Kuza and Etica recorded some good growth, also leading the pack in this category. Zimele also had some slight increase, while Nabo did a very good jump from 11 to 12.29%, which is very, very good. NCBA is still the only company in this category with a single digit return, but then tunaelewa, it's not their core business. I think making it is I think that makes it the reason wako tu okay with the wale at the return. Anyway, I will leave links below for you to open the fixed income fund kama auna already. Remember, it is almost 98% just like the money market fund in terms of every other experience. So kama we ni client to a money market fund, you ka 2% difference here and there is where the money is invested. But ku deposit, ku withdraw, ku open account, if you have a money market fund and you already know that experience, kila kitu iko tu the same. The averages for the fixed income funds is going to remain here, this area, for a while, even though the money market funds might still be going south kiasi. So to crown the show of the day is the Kenya Shilling Money Market Fund, which in this week's review, we can see, were it not for 5 companies, and that is Orient, Gen Africa, Nabo, Genghis, and Zidi, then we could have had an all red show. The drops are not that big. As you can see, the average dropped from 11.67 to 11.48%. We can note that 6 companies are at 13% and above still. Reason why you might start considering having some of your money in the fixed income fund category, because vitu zinaendelea zikienda itakuwa 12% soon. And before I forget, Etica has a new product by the way, which is the fixed income fund in the dollar denomination now. And this is great news for those who seek to invest in dollars, being that it gives far better returns than the United States dollar money market fund option. As at today, I think yesterday, it was at 8.01% compared to the 6% zenye ziko kwa USD MMFs. Only 11 companies are above 12% in total, and so far 5 companies now are returning a single digit return as of now. Gen Africa ili jump from position 17 to position 6, which is very impressive, and Nabo from position 12 to 7. We are still going to see a slow but steady drop over the next few weeks, but I urge you to top up more. Keep pushing. Opportunities await those who will take initiative. Be patient. Don't be in a rush. Don't be greedy. Write down your goal and go for it, slow but steady. As usual, the important links will be on the description below and on the bio, depending on where you're watching this. My name is Otachi. I can't wait to see you in the next video.